Right, so today Famous Brands announced their annual results for the period ending 28 February 2015, and we're very pleased to report that for the 14th consecutive year we've reported record turnover and profits, and also our best ever operating margin at 20.5%. Some of the highlights is that our revenue is up 16%, our operating profit up 19%, headline earnings per share up 15%, and we opened a record 258 new restaurants, which is quite remarkable in these circumstances. So driving the top line really this time around has been the fact that we've had the benefit of 258 new restaurant openings, and of course what we've also had is some great efficiencies in our supply chain, and collectively that's been at the heart of the results for the year ended 28 February 2015. So across the franchise network, our system-wide sales growth has been of the order of 10%, and our like-on-like sales of 4%. As I said earlier, we opened a record number of 258 new restaurants, and so our total presence across the South African and African landscape now consists of 2,545 restaurants, which puts us, I think, probably far and away the largest branded food service franchise offering in Africa. With regard to our presence in the rest of Africa, our system-wide sales in the rest of Africa growth was 18%. Like-on-like was 5%. We opened 45 new restaurants. We're certainly also one of the highest numbers we've achieved in any financial year. And I think what we're seeing more and more is the fact that our brands are starting to gain traction outside of South Africa, and adding to the strong presence that we already have in Nigeria by way of our 152 Mr. Biggs restaurants. From a rest of Africa perspective, we managed to gain an entry into Angola, which has always been on our radar screen during the year, and we are quite a way down the track in terms of ticking another box for us, which is a market that we've had our eyes on for a while, being Ghana. Our supply chain during the year has turned in a phenomenal set of results, more so I would say our manufacturing division. Manufacturing results, turnover grew by 24%, and the profit grew by 36%, and we achieved a 13.7% operating margin in manufacturing, which is way up on the 12.5% of last year. Operating margin in the logistics business stayed constant at 4%. Going forward, we think that the economy is likely to tighten. Certainly there's going to be increased pressure on mainstream middle-income South Africans, so we're forecasting a period of muted growth for the financial year ahead. However, we still believe that the Famous Brands business model will be a compelling investment case for investors. It's a business that trades in the food service space, and we think there's still a lot of runway in the food service space to grow this business going forward. We're also talking about a new vision for the business going forward, which we talk about being Vision 2020. And really what that means is that Famous Brands is about to embark on a diversification strategy. It's a business that is highly cash generative, strong balance sheet, and while we will continue to explore our presence in the food service space, is that we want to diversify into what we call the more leisure environment. And by leisure we talk about getting into maybe the corporate catering environment, into the FMGC space, and probably even beverages if the opportunity presented itself. So Famous Brands over time we think has got the ability to take on the shape and form of a business which is not unlike Anglo-Val Industries or AVI, but probably without the investment in fashion and those sorts of categories going forward.